Welcome to the Investment Banking Leaders Podcast, the only podcast dedicated to helping the investment banking community grow through learning from other successful leaders. So whether you're interested in learning about investment banking or you're an analyst and associate aspiring to be a leader of the future and looking for career progression and advice, or maybe you're a VP or senior that's passionate about leadership and learning from others. Either way, you'll take away something from today's episode. My name is Pete Nieberg, Global Head at Outram, and my mission is to connect as many of you with successful investment banking leaders as possible. So thanks for joining me today and enjoy the episode. I'm pumped to introduce today's guest. I've got Alessio Pieri, partner at Analysts, has over 15 years experience in investment banking with roles covering Credit Suisse, HSBC, SGCB and Ondra before his current role where he joined back in 2018. His career has covered fixed income, equities, corporate finance, M&A and much more. And he's advised on many successful transactions. So he's certainly qualified to share some tips with us today. Not only that, he's passionate about helping others grow and he's an all-round great guy. So welcome to the show, Alessio. Thanks so much for joining me today.
Thank you, Peter. Good morning, everyone.
Let's start easily. Why don't you introduce the audience, the listeners to D'Angelo and what you do for your clients, Alessio?
Sure, very happy to. I think, the way we try to operate at D'Angelo is probably a bit different to what many of you listeners, I would say, define investment banking. I think, when most of the kind of, crowd out there think about investment banking, they think about the big names, about the Goldman, the Morgan Stanley, etc. The way we think about investment banking is that probably there are two services that clients want from investment banks. One is execution of transactions and the other one is advice. We are really trying to play in the advice game, being completely independent, not having a balance sheet, so not having some sort of conflicts coming from the fact that we could be both lenders and advisors. We really try to play in the advisory game only. So our mission is really to become our clients' trusted advisors. So that's a bit of a unique position in the market also because, as you rightly said in my introduction, we tend to be quite holistic in our approach to advisory. So we're not just M&A, which is what most of the boutiques out there do, outside of, again, the big guys, so to speak. But we tend to be quite cross-product, cross-industry, cross-geography when it comes to advisory. So again, it's not just M&A, but we do a lot of capital markets advisory, both in the equity, debt space, and anything in between, I would say. And then also when it comes to industry, we tend to be quite holistic. So I think that's really the way we try to position ourselves in the market. We believe it's pretty unique because, again, we're not here to kind of just execute transactions on behalf of our clients, but it's really to be together with them to help them for any problems regarding investment banking topics, I would say that they might have. So that's really the way we like to be defined, trusted advisors.
Thanks for that. Thanks for the introduction. And it is obviously quite a different model there. And I think the breadth of knowledge must be really important when you're covering the different areas of advice that your clients need.
Absolutely. And I think maybe if I can rebound on this point is that at the end of the day, when you are a CEO, CFO, you're a board, what you need is two things really. You need the advice and not necessarily the product. You might need the product afterwards. But first and foremost, what you need is the advice. And that's what we provide really. So we're kind of, if I can make an analogy, like a family doctor, we are a GP, so to speak, so that they come to us. The GP makes an assessment. We know then what sort of drug you might need to take it to the next level, and that's when we're very happy to partner with other banks, which I would say are more focused on the delivery, on the execution, and on the products, so to speak. But that's really the way we like to think about ourselves. So as a GPs.
I like the analogy. It helps a lot. I always like that to connect. So thank you. And speaking with successful leaders with 15, 20 years plus in the industry, I'm always intrigued to know, how did you end up in investment banking?
It's a good question. I think I've always liked numbers to start with. So that's probably a good starting point. I think also it comes from family because my dad is a tax advisor and accountant. So I guess, I grew up with numbers, so to speak. My very first job when I was 12, 13 years old was spending summer in my dad's office running depreciation books. So that's exactly. So that's really how I started
in the blood.
Kind of getting a bit more passionate about kind of accounting first and then finance. And then I guess it just grew over time. So again, I was really kind of I always like this quantitative side of things, and kind of the natural development for me was to follow this path and this passion. And I think that coupled with really the fact that at the end of the day, what I think investment banking is really about is helping people. And then you might say that it's a might be too aspirational what I'm about to say, but that's really what it is. I think combining those two aspects, really ending the day with the feeling that you've helped someone, whether it's a top manager, an organization, etc., coupled with my passion for numbers. I think that's how I found kind of my inspiration to pursue a career in investment banking. So that's really, I would say, how kind of I developed my career, and why it's really comes from those two aspects.
Excellent. And the helping people resonates with me, and I think, has the variety been important to you as well? Because it seems, as I mentioned in the intro, you've touched on a lot of different areas, and now you're in an area with D'Angelo where you need that breadth of knowledge. So is the variety been a key part as well for keeping you in the industry for so long?
Yeah, no, for sure. I think again, it's you can have highly specialized people on certain niches, I would say, in the industry, or you can have like more agnostic people or more holistic people like me, I would say.
Mm-hmm. Mm-hmm.
Both are needed in the industry, so I'm not saying that one is better than the other. But again, given the way we operate, for sure, it's paramount for us to have a very deep knowledge of whatever is available, sort of in terms of products, in terms of strategies, in terms of advice in the investment banking world. But also from a kind of personal perspective, of course, is I find it much more entertaining, so to speak, to having to deal with very different assignments covering many different aspects in the industry. So for sure, one thing I can say is that there's no day that look like another here at Angelen, given again the amount of different topics we cover with our clients.
Perfect. Well, before we jump into, I guess, what we're really going to start talking about today, is there one thing that you want to tell the listeners that maybe we don't know about you or we can't find somewhere online at this point?
But look, if you send me a CV and you say that you support Fiorentina, you're going to get brownie points.
Okay.
Joking, of course, but no, I guess that's the one thing that that I like to joke about. But no, I think it's one aspect, I guess, that is important to I mean, about me again, I think it's hopefully this podcast is not about me, but it's really about helping people
Yeah.
understanding a bit more what's going on in the industry. But I guess the one thing that I'd like to say perhaps is that don't think of us leaders, so to speak, as unreachable people, or people that they're so detached from reality and so on. At the end of the day, we're all people that we came through a kind of very tough training to get where we are.
Mm-hmm.
But kind of we're normal people. So I think I like, as you said in introduction, for me, I'm very pleased to do what we're doing today. If I can share a bit of my experience to help growing people, is really what drives me, and what really kind of motivates me to be here today. In my early days, I guess I wish that I had all the tools that are available today in terms of networking, in terms of reaching out to senior people in the industry, really to understand what investment banking is about, and what are the different aspects and implications for your career. Because, as you said, when I started, I moved quite a few different places because also probably I didn't know what exactly I was getting into.
Sure.
And I think it's quite important for or at least what I feel is that if I can give my kind of experience, if I can share my experience with younger bankers and help them understanding making career choices along the line. I mean that's really important. So again, feel free to reach out. Again, it's very important to kind of for me to help people understanding what they're getting into, so to speak.
Thanks, Alessio. And I mean, that's why we're so excited to have you on today's show, for sure. So let's talk a little bit about deal success. As I say, we are here to help others grow. So starting off the top, is there some successful deals you've recently closed that you could tell us a bit about? And then what I'm really interested from someone who's been involved in so many successful deals over your career, is what are the keys to having success in those deals?
Well, look, I'm happy to talk about deals in general. Of course, we've been involved in many situations in the past few years. Some of them are visible and can found. Our involvement was public. Some others not. And
Sure.
given the nature of what we do, we like to be quite under the radar. At the end of the day, we are there to advise our client. We're not there to kind of promote our brand necessarily. So
Hmm.
so I think rather than naming names, I think I'd like to really focus on what it takes to kind of be successful in a deal.
Perfect.
And the first thing I would really say is that communication is the key thing. Communication organization is really to me the key ingredient in transactions to make them successful. And whether we're talking about M&A, whether we're talking about refinancing, whether we're talking about any sort of capital raise, so to speak, I think to me having an organized and process and a kind of open channel of communications with all party is paramount. The problem with, or the problem I would say, one of the big issues in transactions is that, of course, you're dealing with many counterparties. You probably find yourself like, dealing with hundreds of people sometimes because,
Yep.
you have advisors all around and so on. And having an organized process and having things under control, more or less, at all times, or understanding really, what's going on and having channels of communications that people know they can use to kind of, pass messages along. That's key. And again, it might not be a very fancy aspect of deals, I would say, uh, but that's really the key ingredient, because without organization, without communication, that is something you don't close a transaction, again, regardless of what transaction we're talking about.
Yep.
So to me, that's the first thing. The second thing, which I find also very important in transaction, is for people to be accountable. Because what happens very often is that, again, given what we just discussed, the fact that you have plenty of people around the table in a transaction, sometimes you don't really know who's accountable for what, and people tend to kind of I don't want to say shy away from situations, but again, sometimes it's just a bit confusing to understand who's the key decision maker, what are the key drivers, and so on and so forth. So I think for me, accountability and understanding who are the key decision makers and kind of their motivation is also very, very important, because again, at the end of the day, even if there are plenty of people around the table in a transaction, then the key decision makers are probably a handful. So understanding really who they are and what drives them, to me, is one of the key aspects to kind of to do my job properly when I advise my clients. So really understand speaking of M&A, to make an example, understanding who's the key decision maker and what drives them. Again, it can unlock many things along the way, and can be used, so to speak, in the negotiation phase, to understand what is really important and what can be kind of push a bit more to the limit. So again, communication and understanding who the key decision makers are. It's probably the two aspects which are not probably the fanciest, so to speak, to have a successful transaction, but they are the two prerequisites, I would say, that without them you can't have a successful transaction.
Perfect. No, I think that's fair feedback. And just to sit on that a little bit, are there certain tactics you apply to get to know those key stakeholders well, like you said, so you can bring it back and have the relationship you want to make the deal successful?
But look, more than tactics, I would call them really trying to develop a genuine interest also on the
Yep.
on the other side,
Yep.
because probably tactics could have a bit of a negative connotation, and to me, I'm truly convinced of the fact that if there is a successful transaction, it is successful for both sides.
Yep.
So I think really trying to kind of put ourselves in our counterparty's shoes is important to kind of come up with an outcome which is so to speak successful to all parties around the table. So there's no specific tactics, but it really trying to spend time with people is very, very important, is at the essence of what we do. So I think I'm going back here to the point when you asked me about why did I get into investment banking. I started by responding because I like math.
Yeah.
True, but the reality is that a lot of what we do in investment banking, I think, again, math is a prerequisite, but a lot of what we do in investment banking is really about relationships and understanding people. So that to me, again, applied to a transaction, trying to really connect with the other side and understand what the drivers are is paramount to kind of get to a successful outcome.
Perfect. And I'm also interested, you started with communication and organization as being really key. How have you seen that change with post-COVID? Obviously, I know we went to a lot of deals being done remotely, which was probably unheard of prior to 2020. Is that staying, and how have things changed from your side?
I think certainly there's been a transition towards more online rather than in person.
Mm-hmm.
I mean, even before COVID, of course, again, given the number of parties you would have in transactions,
Mm-hmm.
normally, a lot of work would be done kind of, through online platforms. So
Mm-hmm.
that was the norm before. But I guess, of course, we have plenty of very good applications we can use to communicate on videos and so on. So I think probably the number of live meetings has reduced a bit. Yet I think that it's very important to keep a certain amount of in-person meetings, because at the end of the day, what gets said like in the corridor in those
Yeah.
meetings is more important than what gets discussed in the room. So I think that there are certain situations, certain meetings that they need to happen in person, because again, it's what gets said in between the lines. When you are on your way to get a coffee, or in the corridor is probably is probably more important than what gets discussed in the room. But for sure, there's been a transition towards having more meetings online, because again it's more efficient, and again people got used to work that way.
Yeah, we definitely see it coming back more, and I'm hearing more and more closing dinners as well returning, which is exciting to see. So I guess we're opening up a little bit more compared to the last couple of years, which is great.
Yeah, and I would add to that at the end of the day, again, going back to the point of relationships, you develop relationships with other human beings in general in life. I would say,
Mm-hmm. Mm-hmm.
in person more than online. I think, I find it personally, maybe I don't know, I'm already too old, I don't know, but I find it very, very hard to develop relationships with people online. I need to sit in front of them. I need to see them. I need to feel them. I need to kind of perceive the body language and so on.
Sure.
So that part of the job, I don't think can be substituted with online meetings. And again, it's just human nature, and that's how you foster relationships, really. So there is a certain amount of meetings that we necessarily have to happen in person if you really want to get the good outcome we were discussing before.
Definitely. And still sticking in the kind of successful deal arena, let's say, if one of our listeners who's new to investment banking, really in the first year, few months of their role, is there any particular advice you'd give them on starting out and supporting deals well to make them successful?
Yeah, I would say again, I think discipline again. If I can use this word, then maybe it can come across a bit as a strong word, but discipline in the process again, reliability, the fact that people know that you are there, that you will respond, that you will systematically kind of do what you're expected to do, is really key. Let's not forget that these processes can last months, if not years, sometimes. So the fact that there is a kind of consistent presence in the workflows, and kind of in the way that work is delivered is really paramount, and it's really, again, it's probably a bit of an abuse sentence, but it's really a marathon, right? So and to run a marathon, you don't have to sprint too early too soon. And again, what really makes a difference also from a kind of senior banker perspective is to have a team which is consistent in delivering what is expected from them. So again, it might not be like the fanciest aspect of investment banking, but it's really how you cut your teeth, so to speak, and really how to learn to get to the next step. So get organized, try to understand as much as possible on how the process is run, and again, try to start thinking about what are the pressure points, and as we discussed before, who are the key decision makers, and learn as much as possible, and ask questions to your seniors, because at the end of the day, that's how you learn. So don't be shy, and again, ask the right questions at the right time internally, and again, be very consistent in what you deliver. It's to me, that's probably the best piece of advice I can come up with on that.
Reliable, consistent, ask questions. I always like when I hear the team asking questions, because it means they want to know something. I think when they're trying to work it out all on their own in the background, that tends to be when some of the troubles happen. So I agree with you on that front as well. And I think let's talk a bit about the ever-changing environment. The nature of the financial world, it is ever-changing. I think we've had, like most industries, to be fair, a lot of change over the last couple of years. From someone who's been in the industry for a long time and been successful, for the juniors listening in to today's episodes, what advice would you give them to be successful in the ever-changing environment that they face?
Now, look, I mean, it's you're right. The environment has changed a lot in terms of, in many respects. I think in terms of players in the market, in terms of how advice get delivered, in terms of how different players are perceived by clients. So that there's been many changes, and of course, there's been I guess those changes in the industry, they kind of if you look at them in a broader framework in the world where we used to be in a more globalized world, that they kind of now we're kind of reverting the trend a bit. So you're right that there have been changes, but I think going back to what we were discussing before, the key principles on how to be a successful investment banker probably are still the same in terms of really kind of be consistent in what you deliver. So I think resilience, reliability, they are at the core of what we do. I would mention something else, which is integrity. I think especially for an advisor like we are, for a holistic advisor, at the end of the day, integrity on what you deliver to your client is paramount. I think you cannot just say trying to push a transaction just because you have an incentive to do so, because it's gonna backfire on you big time. So I think that's something that for sure, when one piece of advice I would give to kind of the younger self, and also to some of the listeners today, I would say is that be very kind of be truthful always. I mean, which might sound, again, I'm not implying that people are not truthful what they deliver, but at the same time, really making sure you're acting with the utmost integrity is a key building block in the industry. I think we have instances in the past where I guess or some of the reputation in the industry sometimes is that people tend to cut some corners. I think we cannot afford that as an advisor, particularly. Again, it's really paramount. So acting with integrity, which it starts with acting with integrity internally. So really, making sure that what you deliver is kind of is solid, reviewed, and again is done with the best of your kind of capabilities. That's a starting point, and then again that translates in the product you deliver to your clients. At the end of the day, look, it's clients put a lot of faith in people like us. So again, more than talking about technical skills, to me is really a kind of acting with good values that matters. And then that's kind of the key piece of advice I would give to kind of the younger generation.
Yeah, I think integrity is paramount, and I've heard other leaders describe it as do what you say you're going to do, and I think that's a nice way to build on that as well. If you say you're going to do it, really do it, and I think that's important for all relationships. Let's kind of move into leadership a little bit more. What would you describe your leadership style as?
Look, it's an interesting question, and before answering that, I would say that one interesting aspect in investment banking is that your job changes a lot as you go through the ranks, because when you start as an analyst, it's really about, I would say, Excel and PowerPoint, if I can call it this way. And as you move up, more and more you have to manage people as opposed to kind of spending time on the details. And that's a skill, managing people in general is a skill that doesn't really get taught. I mean, it's something that you learn as you go, and it's not easy. And to me, what I always say to my junior team is that probably the most difficult step in investment banking is when you transition from analyst to associate, because when you are an associate, that's when you start managing people. And that's, again, a skill which is completely different from anything else that students will study at university, or what you would do as an analyst. So that's a very important aspect, of course, but again, it's something that is very difficult. And again, it's interesting how this job requires like a constant transition on what skills you have to apply on a day-to-day kind of work. And then going back to your question, what's my leadership style? Look, I truly believe that people need to be empowered to be productive. I truly believe that people give their best when they feel that they have skin in the game, and also they are held accountable for what they do. So it goes back to what we were discussing before, some of the key concepts like accountability and again empowering. To me, I truly believe that when people feel that way, they give their best. And it's I would really, I think one I would say difficult quote unquote aspect when you manage people is that, of course, we all come in different shapes and forms, and we come from different backgrounds and so on. So that it's very difficult to have like a unique way to manage people, because again, some people, they might react to something in a different way. But again, as a key principle, I would say that, and it goes back a bit to what we were discussing before about transaction, is that the moment you understand what are the key drivers motivating a person, what I really try to do is try to really kind of put pressure on those points,
Mm-hmm.
because that's where I feel that we get the best outcome for us, for our clients, but also that's what gets people engaged and motivated to work with us. So that's really the way I like to see, in a nutshell, people's management, kind of in general, that is really not kind of trying to uniform everyone, and having them all in the same shape, having all squares or whatever, or triangles, but you really try to kind of keep diversity, but again applying pressure points where that those pressure points are gonna trigger the extra motivation and feel people empowered. So that's really what I believe in terms of people's management.
Thanks. I love that insight, and it resonates with me. And I think managers get taught to be managers last. Like you say, it's the rest that comes, and you kind of get left to learn it on your own. So help those analysts transition into associates and taking on that kind of people management transition. Any other advice you could give them? Things to be aware of? Like to sit there a little bit more. I think that could be really interesting for the listeners.
Yeah, no, look, it's very happy to kind of dig a bit more into this topic. I think when you talk about the transition between analyst and associate, I think when you are an associate, I guess you've developed enough skills to kind of deliver products, so to speak, to your VPs or to your MDs or whatever. And sometimes associates tend to have exactly the same expectations on analysts, so to speak.
Mm-hmm.
Let's say let's to make a practical example, you have to run a DCF analysis. As an associate, you know very well how to do it. You've used your template like 10,000 times and so on. So you give it to your analyst, and the analyst might do something slightly different, which is or present the output in a slightly different way, which is not the way that you would have presented,
Mm-hmm.
but it still works. And I think for me, it's a very fine line there between like correcting kind of what you don't like, but also leaving the analyst with enough room to breathe, so to speak, so that
Mm-hmm.
if there are minor things, I would say that you think that actually you would have done differently, but they can still work, so to speak. My advice would be to kind of let the work of your analysts go through your filter, so to speak, and go to the next step, because again they will feel rewarded when again they realize that some of their contribution actually does not necessarily need to be uniform to what your expectations are. So again, there are many different ways to deliver a piece of work. So when you are an associate, again, for me, the advice is really try to focus on addressing really what doesn't work from a conceptual perspective, but try to leave as much room as possible when it comes to presentation, or again variation of how an analysis is done, which again the analysis needs to work. It needs to show what the analysis is meant to show, but at the same time, again, things can be presented in many different ways, which again some might work well or better than others, so to speak. But again, I think the one common mistake I see is that associates tend to uniform too much to what their expectations would be, and again, it's something that as a piece of advice I would recommend associates not to do
Yeah.
as a starting point.
I love that, and I think it goes back to what you mentioned on empowerment, and you called it space to breathe as well. You got to let the analysts learn and develop as well, right? So I like that. And taking the steps that you took towards being a leader in the industry, what helped you grow? Were there trainings, mentors, books, podcasts? What was it that you kind of reached to that helped you develop those skills that maybe were lacking?
But look, it's a good question, and I think it's a mix of things really, because I think I was lucky enough to have very good mentors along the way.
Mm-hmm.
So I really had the luck of working with some of the what I think really top bankers in terms of what I've seen in the last 15 years in the industry. So that of course has helped a lot in terms of again, first of all, understanding what are the key principles in this industry, and what does it really take to be successful. And again, that comes before talking about the technical skills, but it's really about trust, about building relationships, about acting with integrity. And again, I've had the luck to work with some of the best, so I was that made for sure a big difference. I think the second aspect I would mention is that, of course, in many situations you're also thrown at sea, and then either you swim or you drown. uh, and it takes a bit of it takes a bit of that, and it takes a bit of sometimes you need to kind of how to say, kind of a job which is a bit bigger than you, if I can use the expression, meaning that sometimes you're not fully prepared to kind of do a piece of work or an analysis in terms of, maybe I would need extra support, or maybe I'm not fully comfortable in doing that. I think if you feel like 90% comfortable in doing something, you should go for it.
Yep.
Because you can always improve on the remaining 10%. So again, of course, you need to make sure that the advice you deliver to your client is sound and is checked, etc. But I think also trying to accept challenges which are a bit outside of your comfort zone is something that really helps you growing, because again, you know that those are the situations that help you grow, really, because if you really always like on your comfort zone, going back to my DCF example I used before, if you always use the same template, you same inputs for every company and so on, you don't really grow. I think the moment you grow is when you do something slightly different, something that is slightly uncomfortable to you, and essentially you again, you're thrown at sea, and then you have to swim a bit. So you need those situations. You need to be uncomfortable at times, because again you don't grow in your comfort zone. So I think that's important. Again, I was lucky enough that I had bosses that left me, going back to the concept, breathing space, and empowered me to do things that probably they were a bit out of my comfort zone. And again, this has been massively beneficial. And the third point I would make is the importance of networking. So not just within the institution you work, but also with other colleagues, or other different institutions, or with clients, because again, to me, what we deliver in this industry is really advice. And again, going back to what we were discussing before, is really trying to put yourself in someone else's shoes, and you really can do that only if you network and you understand what drives other people. So that is really key to me. I think what I always recommend my team is to spend a certain amount of time in having coffees, catching up with clients, even at the very junior level. And I really encourage my associates, my analysts, to reach out to people we work with in different projects, which again, of course, these guys are not decision makers yet, but they will be one day. That's the first thing. But the second thing also, it really allows my team to put themselves in our clients' shoes at more junior level. And so, and again, and to me, this is paramount, because again, it helps you really growing and understanding what are their drivers, and again, for what we're trying to deliver is paramount. So networking for me is an essential part of growth in this industry. And I think, of course, things like the sort of what we're doing right now today, hopefully it can be helpful as well, to have a bit of a broader perspective on how different people think about the industry. But I consider that to be part of a kind of networking exercise, so to speak, in that kind of bucket.
And outside of coffees, is there other things you recommend? I think getting out for coffees with others in the industry and clients is a great way. Is there any other recommendations you might have for improving networking skills for those newer to the industry?
I look, also going to events can help, because at the end of the day, again, it goes back to the concept that this business is a lot about relationships. And I think, developing relationship skill is something that doesn't get taught at university, especially in a more kind of a formal environment, as it could be like, in investment banking, or where you're with clients. So I think, trying to attend events is also a very important aspect, because again, you find very, often yourself alone, or knowing very few people. So you're forced kind of, to reach out and trying to build a relationship, which again is a skill per se. There is this, there might be this kind of slightly awkward moments where you don't know who to talk to, or how to initiate a conversation, and so on. But again, this is all part of what we do in life, and again, it's a great opportunity, A, to learn how to connect to people, but B, also to learn from someone else, what's their experience, and understand their viewpoint. So that's something I would also recommend.
Again, getting out of that comfort zone, coming back, and I think more so now after COVID, it's probably taken a bit more development for those skills. So I love it. So it's a great point. We'll move on a little bit towards culture. It's obviously vital, really, for thriving and successful teams, and leaders always play a huge part in that. How do you see the investment banking culture changing over your career?
It's a very interesting question as well, and I think it's a very broad question to answer, because again, it's investment banking is at the end of the day, you have many different bits and pieces right around investment banking. So I think to come up with an answer that catches all kind of different dynamics is not an easy task, to be honest with you. But I think if I can make, or at least the first thing that comes to mind, I think in the current world there is much less tolerance for risk taking in general. I mean that's probably something that again, thinking when I started, like that was before the global financial crisis in '08. I think when you think about the very early years like '06 or '07, I think we still lived in a world where there was a lot of risk taking, and probably this concept of risk per se was not as strong as it is now. I think that has changed a lot. Sometimes I think it's even gone too far, to be honest, because I think the amount of regulation, the amount of scrutiny that that we have today in our industries probably got to a point where sometimes you can't even operate. So it's even gone to the extreme. But for sure, I think that there's been a healthy transition, and I want to call it healthy, from a culture which was probably excessively risk taking before to an environment where now it's there is much more understanding of risk. So that's good. And I think also again, it's probably when you think about the movies in the 90s, the big movies about investment banking, you can think of people always have this image of like excessive life, spend very lavish life and so on. I think it is probably not the case anymore, I have to say, if I can call it this way. Not because of course I think we still are a privileged kind of category. We work very hard, we still privileged category, but I think it's the kind of it goes back a bit to the risk taking and the excess that it was creating probably before. I think now there is much less of that. So I think the whole overall kind of approaching the industry is much more down to earth, so to speak. So I think before there was a lot of kind of oh I want to be a banker because I want to have all the perks associated with it. I think now, like the vast majority of the people that work in the industry is not because they want to have the status, but it's because really they believe in what they do. So whereas before probably there was too much of kind of oh, I want to have the status without doing the hard work, so to speak. Again, and I can talk for many of my colleagues, but also people working for competitors. You really see that you do this job only if you like it and if you have real passion for it. There is no room for kind of doing this job because of the lifestyle.
A hobby. It's certainly demanding, and that kind of raises a different question for me, I guess. The demands of investment banking are big. That's well known, and there's a lot of hard work that goes into every position. How do you manage the cultural part effectively within a team whilst considering the demands that the business has?
No, look, it's a very crucial point to me, culture. And again, I know it can be seen as a bit of a vague concept. What is it really, culture, at the end of the day? But having a strong culture on how we do things, and it goes back to the points of integrity, the points of putting ourselves in the shoes of our clients and so on. It's really key because without having a strong culture, and what I mean by culture, what I try to define as culture is really acting with a set of rules or a set of principles from modern rules, I would say, which respect our core values, so to speak, which are aligned with our core values, which go back to integrity, to delivering a good product for our clients, to act always consistently with kind of consistently with the best interest to our clients. So that's very important because that kind of element needs to go in every piece of work that gets done. So I think the two, to me, kind of the execution or kind of the production of outputs and the culture, they just inextricably kind of connected, because in everything you do you need to act using the culture, so to speak, which the way we just define it. So in a way, I don't see the two of them as a kind of as a separate, but it's really part of the same story. It's really, you need to kind of put your culture in everything you do to be successful, or to be sort of to deliver your clients what they expect from you. So, and then again, how do you build this culture could be the next question. And to me is really working in a team, which again, it might sound like a very generic concept, but I think what we really like And what I really like is to work in small teams. So the way we operate is always like, team of like, 3-4 people, no more in a project. And the reason for that is that, going back to what discussing before, one, is good to keep people accountable and empowered. But also from a cultural perspective, the moment you work very, very closely with someone else, that's how you really, the culture gets transferred. That's really how you don't, so to speak, you leave dark corners, so to speak, where you don't see what people are doing and so on. So I think this kind of working in team really reinforces like the cultural aspect, because at the end of the day there is kind of one is checking on each other, like each team member is checking on each other. Maybe checking is not the right word, but it's really like that there is an element of kind of reinforcing this sense of integrity, this sense of we need to do things the right way, because that's how my colleagues are working. So to me, that's really at the essence, once again, of what we do.
And is there one part of the culture, and I'm talking about the investment banking industry as a whole now, that you'd most like to see changed? Maybe it goes back to the risk you mentioned before, maybe not, but is there a particular element that you'd most like to see change?
Look, again, it's not an easy question to answer in terms of looking at the industry as a whole. And again, I will go back to the point that I think that's coming back to the point that the vast majority of people I know in the industry right now, other advisors, other firms, they really do this job because they like it. So I think there is a lot of kind of positive cultural change in that, and again, less risk taking. So I think we make good progress. Is there more that can be done in terms of changing a bit the culture and so on? Look, it's that there can be, it's difficult to speak for all, because I think there can always be the situations where and here I'm thinking about our audience, our junior audience, that might feel pressure because it's like, I've been treated unfairly because my MD gave me like a full pitch to complete 50 pages in for the following day and so on. So of course there will always be like those situations which they might have occur in some places, I don't know. And maybe that's something that again in different in certain domains could be run more efficiently from the top, so to speak. Sometimes there is still too many layers in between the top and the bottom, so to speak, where again things get lost in translation, and that might result like in a huge amount of work carried by the more junior team. So maybe that's something that, again, in some of the larger institutions still happens. Again, given that we run a company with 15 people, we don't really have much of that. I think when there is work to be done, it's really because there is work to be done, not because there is just one MD that wakes up one morning and decides that he wants 50 pages of something random. So with no client meeting scheduled, which to me makes a big difference. So maybe there is still a bit of that. Again, but I don't want to talk for someone else, because it's also true that on the other side, maybe something that I'd say to defend my category, so to speak, of the more senior people, there is a lot of pressure on us as well to deliver, not only from our institutions, of course, but also from our clients. And again, the fact that when you become an advisor, you're really like available 24/7, and clients call you for all sort of issues, and they expect you to be available at all times, again, and with to deliver, so to speak, what they need. So because at the end of the day, they also live their life, their kind of life. If you think about CEOs, CFOs, if you think about board members, I mean, they have a super busy life, and to some extent, they work 24/7, which again, you might argue is not a very healthy lifestyle, and I might agree with that. But at the end of the day, if they work the way, it's very difficult for us not to work the same way. And that's why, when it comes to us on kind of, asking work from the more junior ranks, that's why, some of those situations could occur. So I think it goes back to the point that the industry as a whole is extremely demanding, because again, our client, they have a demanding life, and they need, partners which are equally present and can be there to help them when they need us.
I understand that. And I think, we talked about the demands of the industry, and it's real for everyone to see. And being in the industry servicing the investment banking community, I can understand the demands that we need to have for them as well. So it makes a lot of sense. And I want to touch just quickly on recognition. Investment banking doesn't always get the best reputation for recognition. What's your take on recognition? And have you seen good recognition within your firm or within the industry?
With clients, probably we do get the right recognitions, I have to say, because they do see the value that we add in situations. Sometimes it can be quantified in numbers even, but again, that's not the point. But I think it's also like you know what you contribute to the overall kind of outcome of a certain situation. So when it comes to clients, so we're talking about really the kind of corporate world, I think there is a lot of recognition of what we do, the effort we put in kind of in delivering our advice. So from that perspective, I don't feel like I'm kind of brutalized by clients and there is no recognition, and they just. So I think I'm very grateful to kind of the recognition we get from our clients and the ecosystem, so to speak, because even like talking about maybe legal advisors as well. I think sometimes of course more often than not we work with them and there is a lot of kind of teamwork with them, and then again there is a lot of mutual recognition for the work they do and the work we do. So I think within the system, I think we get our fair share of kind of brownie points, I would say. uh, I think on the outside world, probably there is still a lot of misconception on what this industry is about. Uh, and what is involved in terms of delivering what we deliver. So again, we have. I go back to the fact that we have a very demanding lifestyle, and what we deliver is really pieces of advice which try to make I want to call it try to create value, not necessarily just for the company, but for all the the company, not shareholders, debt holders, but all stakeholders. I mean, we're talking about the other day internally, like we had an offsite and someone asked like what does it make you sleep at night, and my response was like when my piece of advice might have an impact on the job of 10,000 people, well, that doesn't make me sleep at night, to be honest. Is a huge responsibility. So and again,
Sure. Yeah, I get that.
so going back to the recognition point, that there is of course that you try to do your best in terms of acting again with your skill, with integrity, thinking about how can we create value to all stakeholders. I mean, do we get the right recognition? That I don't know. I mean, at the end of the day, it is what it is. I guess each category they would get I don't know, maybe some more, maybe some less, but more than recognition, I think what I feel is that there is a lot of misunderstanding still on what we do, and I guess it is what it is. I guess I can't change that, but it would be kind of interesting to share a bit more. And I think what we're doing here today can be helpful as well to understand that what we do at the end of the day is trying to help really, and with that, again, people then they can make their assessment whether we do it well or not. It's fine, but it's really what we're trying to do as advisors.
So coming into, I guess, the end of the podcast, couple of questions, and I'm going to try and get you in the mode of looking back over your career a little bit. So if you went back to, Alessio in the first role, first couple of months into it, what advice would you give yourself today?
Look, I would definitely give myself the advice of doing more networking, speaking more to people. I think the one mistake I did at the very beginning was to focus a bit too much on my day-to-day task without kind of trying to expand my network, trying to speak to people more, and trying to understand really what different functions within investment banking do. That to me would be really the key element, because again. Hopefully it's much less the case now, but when I started, I think the whole concept of networking, the whole concept of reaching out was not really there. But it's fundamental to progress in this industry, to understand really how other people's career have developed, to understand again what are the needs of your clients and so on. So that to me is probably the best piece of advice I would give to the younger self, to do better, and which I didn't do, and I wish I did.
It'll certainly come through, and hopefully the listeners will take that on board and get to the events and get to the coffees you mentioned with clients and colleagues alike. Before we get to the final part of wrap, have you thought about life after banking? Any plans?
But look, I think once you're an advisor, you're always an advisor. So again, if if we go back at the very beginning of why did I get into this industry again, if I can summarize in two sentences, is really because, or in two words, is really because I like math and I like this helping people, so to speak. If I kind of this aspect of really trying to help people in delivering something. So I think with that in mind, to me it's very difficult to see myself doing something different, to be honest, because I really like what I do, and I wouldn't think about life after banking for now. I think I can think about what I like to do when I go back home in terms of spare time. But I think I don't see myself out of this industry because again I just love what I do, and I don't see myself doing anything differently, to be honest.
And again, having the longevity in the career and in the industry, on the personal side, do you have any recommendation for bankers? We've talked about the demands of the role and how busy it can get. Do you have any recommendations from what you've learned over the years to help the newer entrants to the industry in terms of personal time and what they could be doing?
Yeah, look, I think it's. I think this is more of probably a generic advice, and again, it might sound a bit of a contradiction with what I said before when I said that our job is a 24/7 job, but I think it's very important to carve out like half an hour, 1 hour for yourselves on a daily basis, whether it's a walk, whether you're doing sport, whether you're doing whatever activity you like, reading a book. I think it's very important to disconnect completely for 1 hour. And I know that, again, it might sound very aspirational to some of our listeners in terms of, they might get emails at, midnight, whatever, 2 a.m. But I think, trying to really find this time is very important because goes back to the point that this is a marathon. It's not a sprint in general. Again, it's sorry for using a very abused sentence yet again, but that's what it is. So I think finding a balance, whatever the balance is very important. So again, this is probably an answer that many of my fellow colleagues won't like because they want their teams to be available at all times. But I think for maintaining a good kind of mental health balance is very important to carve out a bit of time on a daily basis to kind of think about something else.
Couldn't agree more. And I think as you get to leadership as well, that becomes even more important if you want to guide the team well and do the best by them. So I can't believe we're at the end of the show. We only have really a couple of minutes left, max. For those listening who want to get more of you, Alessio, how do they best connect with you?
Look, I'm on LinkedIn, so very happy to connect with some of our listeners. Again, I try to connect to people every time they ask to, because I really believe that again, networking is a key element of our industry. And again, I wish that the younger self connected more to people back then. And again, there was no LinkedIn, I guess, so it was a bit more difficult. But again, very happy to kind of try and spare some of my time helping you guys get more perspective on the industry.
That's awesome. And I'm sure the listeners will love that as well. So thanks so much. And last but not least, I'm a strong believer that successful leaders are readers, and doesn't necessarily mean books these days. I know there's tons of more ways to get materials, whether it's through podcasts or other methods. Is there something particular that you recommend to those listeners?
It's an interesting one. Look, what I read, I tend to read things which are, of course, beyond like the kind of, the financial papers, that usual, FT, Wall Street Journal. I think I like to read both of them because, we are European based, but I think it's very important to get the US perspective on a daily basis. So I read both of them on a daily basis. And then I like reading, but on my spare time, I try to really shift away from anything that has to do with finance. So it's probably my piece of advice won't be the best here, but I think reading the papers on a daily basis again and try if you're listening from some other countries like continental European, I think it's very good to kind of try to do as much local reading as possible because it really helps you understanding the local context, so to speak. Especially because in this industry we advise global clients located in different geographies and so forth. So I think again trying to find this at least 15-20 minutes on a daily basis to read the headlines in different countries if you speak different languages is very important because again it will give you a perspective on what matters to clients. Again, I'm based in the UK, of course, but I have many clients in the US and in continental Europe. And to me, to read the headlines of where my clients are based and what they read in the morning is very important because the moment I get on a call with them, I know what they read in the morning and I know that they will react to it. So that's again a little piece of advice I would give to our listeners to do because again it allows to kind of create a stronger connection with your client and to be more relevant for them.
Awesome. Thanks for that. Great advice. So I just want to wrap, I guess, now by saying thanks very much to you, Alessio. I know you're a busy man, so sparing the time to help the audience today is much appreciated. So thanks for being on the show.
Thank you very much, Peter. It was a pleasure, and good luck with the other episodes.
Thanks so much. And thanks to all the listeners today as well. Join us for next week's episode, and best of luck on those transactions.
Thank you so much. Thank you.
Take care. Thanks for joining me today for the Investment Banking Leaders podcast. Today's episode was brought to you by Outram, the global leaders in commemorating your most important transactions with a meaningful deal toy. So you have a successful deal to celebrate, hit me up or the Outram team at outram.com to get your design started. I really enjoyed chatting with Alessio and his many insights on how to succeed in investment banking. I loved his view that successful deals are made through great organisation, communication and accountability, but where an understanding of all the key stakeholders and what really matters to them was key. His important takeaway that networking, grabbing coffee with colleagues and clients alike, as well as getting out into industry events, is key to succeeding in the business, and he wished he'd done that more at the start of his career. His perspective was the toughest transition was between analyst and associate, but by building management skills and empowerment, this could be a lot smoother and lead to better success. I hope you have many takeaways and you enjoyed the episode. Join me again for the next discussion with another successful investment banking leader. In the meantime, you can find us where all great podcasts live. Please follow our podcast page, share it with those interested in growth and development. And until next time, best of luck with your transactions.